Now, as we head into the overnight session and tomorrow, clearly the market's way overdone on the downside. If we look at the larger time frame chart here, you can see a swing high is 29.75, so 56.29.75 is the swing high, and now we have sold off all the way down into the 54.62 area, and you can see that's like the bottom of this swing that ended up launching the market to the upside. There's also a launching point right over here. So ES is way overdone. NQ, similar situation, way overdone to the downside. I think it would not be surprising to see a bounce in the overnight session. Our bias will continue to be bearish, but that doesn't mean that the market can't bounce in the overnight. I think that in the overnight session, it's certainly possible for ES to bounce back up into this broken support, which can now act as resistance. So, on the upside, the closest area of resistance would be around 95 to like 55.01. And then as the market pushes higher, it'll be running into better and better resistance. So 30 quarter to 35 quarter, and then the 40 to 50, 52, of course, is going to be a very strong area of resistance heading into tomorrow. It's unlikely that we're going to retrace this entire move, given the magnitude of the sell-off and just the linear movement that we saw today. It doesn't mean that we're looking for a reversal. The idea is that we're oversold into support. Markets are very overdone. So we're looking for just a short-term or relief type of bounce here. The intermediate term bias is now going to be neutral. And the short term, just because we're so overdone, can be viewed as neutral bearish, but understand that the sellers are still much more dominant. And typically after this kind of move, even though we can get a better bounce, that bounce usually ends up struggling. And then eventually maybe we go higher, but we're day trading here, so we don't have to look too far into the future. So on the upside, like I said, in the overnight, wouldn't be surprising at all to see a pop back up towards the 95 area, kind of this 95 to like 55.01, so 54.95 to 55.01 could easily get tested. Maybe we get a bit of a response there. Holding below that area would be a sign of continued weakness, and it could result in a retest. You can see that we saw some very heavy downside tick readings today. Now, on the one hand, that signals weakness, but quite often when you get these heavy downside ticks, it marks a tick extreme. It tells us that perhaps, at least for the time being, the selling is done. And, the market has kind of flushed out a lot of pre-existing longs, and that creates a fresh slate for new buyers to jump in. And that's why our short-term bias tomorrow or in the overnight can be neutral bearish. So you'll note that this morning it was bearish, but now it should be neutral bearish because we have moved too far too quickly, and we could get a relief bounce that could take us quite easily into that 95 to 55.01 area, even 55.08 to 18 is not going to be a big deal to get tested. The larger time frame swing that's in play right now looks like this, and you can see that if we went up to 55.26 here, that would just be a 38% retracement. Now that wouldn't really even be that big of a deal. So right now, I think the resistance that is going to matter is going to be 55.08 to 55.18. I think that's going to be a hurdle on the way up, and we could see some selling still take place there. And if we take that area out, that could then open the door for perhaps, testing the 40 to 50 area or somewhere in that range, right? Like then we could test the 35 to 44, roughly, and maybe eventually we can test even the high from today. But for now, the idea is that the first bounce is likely to get sold, and 55.08 to 18 is going to be the key resistance in the overnight session. And if we take that area out, then perhaps the 55.35 to 45 area could come into play, and then we would expect sellers to step in there as well. And if we start taking out some key resistance, then we will adjust our hypothesis and assume that this low has potential to stick. Because right now, that is what we're trying to answer. The question that we're trying to answer is this a low that is now going to stick and we're going to start consolidating back within the recent large swing and kind of form one large balance area? Has the market now found a floor? That's what we're trying to answer. And that's why the short-term bias will be neutral bearish, because if the market has found a floor, then yeah, we could go back to 55, 35 to 45, and quite easily go back to 55.08 to 18, right? So we still get a nice bounce here short term, but that is what we're going to be focused on, is trying to see where the market finds a floor. And it may not be today's low. Again, I don't know if it's going to be today's low or not. That's the question that is going to be top of mind, I believe, when it comes to larger time frame market participants, right? Like, is this a floor, or do we have to perhaps probe lower and then we find buyers? But I think we are now approaching areas where it starts to make sense for larger time frame participants to begin stepping back in, right? So you can see that we have like a big breakout area over here. So the swing high here is 54.33. So, 54.33 to 63, there's just a big area of support over here. You have a basing pattern over here at 53.93.75 to 54.03. That would be yet another big area of support. So I think that we're now going to be approaching essentially bigger picture support. And the bigger picture bias is unaffected. It's still bullish. And it's going to be very telling whether buyers can defend here and step back in. Because like I said, the market's way overdone. And, we could easily bounce back up. And as the market pushes lower and lower, the risk reward shifts away from any new shorts jumping in. It's not going to make sense for new shorts to jump in at these lower prices, because they could easily get stopped out. And this is kind of where, you get some of those like face ripping rallies, or at least you have the risk of those, strong rallies based on larger time frame buyers stepping back in with some force. And, anyone who understands the market also understands that that is a possibility. So I think at least the smart money, or the big money, is going to be very hesitant to enter new shorts down here. And that can then create an environment where every attempt lower offers a buying opportunity, at least on the day time frame. And because shorts are going to be pulling back from how aggressive they can be, the market may have to pop a bit higher to find sellers. So I think that's going to be the dynamic here over the next couple of days, is even if today is not the low, which it might not be because it hasn't really hit major support yet. So, we can certainly go lower and then find buyers. So even if today's swing low doesn't stick, it doesn't mean that the next leg is not going to result in a big bounce, right? So we just need to be on the lookout for that. You don't have to predict it. As long as you at least are aware that it can happen, then when it starts to happen in real time, you should at least be able to detect it. That, okay, this is now what's going on, and this is why I need to back off from the short side and maybe start buying pullbacks again, right? So what would the market look like if it started reversing back to the upside? Well, we would see strength come back into the NASDAQ. We would see the NYC tick holding above zero. We would see negative ticks start to become buying opportunities. You know how today the positive ticks were selling opportunities. Every time you got a positive tick, it was a swing high, or at least a short-term swing high. Well, if you start to see the opposite of that, where every time you get a tick low, it ends up being a swing low, and then the market bounces a bit better than before, and then on the next rotation, ES comes down, and again you get a big tick low, minus 1,000, but it doesn't make a new price low. It ends up actually being yet another buying opportunity. Those are the little signals you want to look out for, right? Those are the signs that you want to be looking out for in order to detect a potential reversal. Again, it doesn't have to happen, based on today, but it doesn't mean it can't happen, tomorrow or even the day after. So something to be mindful of. And then, of course, there are certain days where you have to focus on preserving capital. There are other days where you have to focus on being aggressive and deploying capital. And, when you have one of those opportunities where things are aligned and clear, that's when you got to press. And then when things get overdone in one direction, then you got to back off. So I think we're approaching a time here where it just won't make a whole lot of sense from a risk reward perspective to continue pressing the short side because that's when you can get a short squeeze. Again, it might happen, tomorrow, might happen a couple of days from now. It's hard to say, but once the market finds a floor, once the market, finds those larger time frame buyers, and that is what the market is seeking right now, is those larger time frame buyers. Once you have that, then you might end up getting a much bigger bounce than some people anticipate. What you don't want to suffer is recency bias, right? This is another trap that a lot of traders fall into. If the recent price action is bearish, they go overly bearish. If the recent price action is bullish, then they think the market's never going to turn around. You have to be objective. That's the whole point of having these discussions on market context. That you don't want to be emotional about it. You don't want to get sucked into the moves where you see, one big down day and now, okay, that's it. The market's never going to recover. That's rarely the case, especially for us as day traders, right? Because even if the market's eventually going to go way lower, who cares? It's about what is the market going to do now, in the next hour, in the next day. That's all that we really care about. So for day trading, it is especially important to maintain a high degree of flexibility. All right, guys, so those are my thoughts heading into overnight and tomorrow. Hey, good morning. Let's go over today's trade plan. So as we reviewed in yesterday's live recap, the market was now quite overextended and oversold, and it was looking for a place for larger time frame buyers to step in. And so far in the overnight session, buyers have been active at the 44.75 to 54.75 support, which was also a bull bear zone. And now heading into the open, our intermediate term bias will be neutral and our short-term bias will be neutral bearish, mainly because the market is very overextended, and if buyers hold ES above today's initial support, then there would be potential to go back up to today's overnight high area at 54.81 to 91 and even put in a breakout above it. Now, in order for the intraday bias to turn bullish, we would need to take out the 54.81 to 91 initial resistance, and that breakout should be able to clear 54.95 to 55.01. So we don't want to see a breakout attempt that swiftly gets rejected at 54.95 to 55.01. Because remember, the bigger idea is that the market has been bearish, but now it's overextended and looking for larger time frame buyers to step in. So if that hypothesis is to play out, and let's say initial support happens to be the spot where larger time frame buyers step in, then if we get a breakout above initial resistance, it should be a relatively swift upside break above 54.91, that should be able to clear 54.95 to 55.01 with ease. And if the market rejects 54.95 to 55.01 and we get a false breakout pattern, then that would tell you that the market has not yet found larger time frame buyers, and in that situation we may just continue to balance within the overnight range or eventually even have to head lower. Now, if we do get that successful and sustainable breakout above initial resistance, then on the upside, ES would have potential to test 55.08 quarter to 13 quarter, as well as 55.17 half to 24, and the higher the market pushes, the better the odds of sellers stepping in. So we'll need to be aware of the real-time momentum situation, and if ES is heading higher on some decent momentum and some large upside tick readings indicative of larger time frame buyers, then we may have to hit 55.2875 to 36.75 before we get any really decent sell response. And again, the higher the market pushes, the better the odds of sellers stepping in. So in the event that we go back up towards yesterday's RTH high at 55.4175 to 51.75, that would be an ideal spot for the sell side to step back in. And given the recent bearishness, sellers are likely to be active even at 55.2875 to 36.75 and possibly even 55.17 half to 24, at least for a reaction. On the downside, a break and hold below initial support would be needed in order for us to get an intraday bearish confirmation. And as long as that breakdown is happening on broad market weakness and sustained downside momentum, with the other markets also breaking their overnight lows, then we could get downside range expansion into 54.26 quarter to 36 quarter, as well as 54.1475 to 19. And the lower the market pushes, the higher the odds of buyers stepping in. Now, given that we already got such a large range yesterday, it's less likely that we're going to hit the range extreme today, and we may not even hit the range exhaustion zone. So because we've already made such a large downside move, buyers could also step in at 54.1475 to 19 and possibly even 54.26 quarter to 36 quarter if the breakdown attempt is going to turn into a false or failed breakdown pattern. And again, those lower zones only come into play if the market puts in a proper breakdown below the initial support, which we're also using as the bull bear zone. As long as that zone is holding, the buy side would still have potential to be active, and again, that upside breakout scenario could play out. So that is the market context and plan heading into the open. Let's see how the real-time situation shapes up and how the market behaves at the initial support and the initial resistance zone. That's going to help set the bias and tone on the day, and we'll take it from there.